Welcome back to the Pro Ticker Podcast, your Thursday morning edition, covering major financial magazine headlines, everyone.
Sounds good.
Let's dive into some of the most fascinating stories of the day. You know, it's amazing how we can have
Yeah.
such different economic pictures emerging at the same time.
Mm-hmm.
Like, take Germany and the UK, for
Well,
example.
that's a great point.
Yeah.
It really is a tale of two economies right now.
Yeah.
CNBC is reporting that Germany is actually facing its second year of economic contraction,
Oh, wow.
with GDP shrinking by 0.2% in 2024.
A second year in a row. That's quite a slump for a powerhouse like Germany.
Yeah.
What's driving that?
Well, it's a few things, actually.
Okay.
CNBC is pointing to a house building crisis.
Okay.
Fueled by those high interest rates we've been seeing globally,
Right.
pushing up those construction costs.
Mm-hmm.
And then on top of that, they've got pressure on some of their key industries.
Yeah.
The auto sector, for instance, is facing kind of a double whammy.
Oh, right. Trying to navigate that tricky transition over to electric vehicles while also fending off competition from China.
It's not an easy feat at all.
Yeah.
I mean, this shift to electric vehicles
Oh, yeah.
is more complex than I think a lot of people anticipated.
Yeah.
And the rise of these Chinese automakers is really putting a strain on those traditional players.
Yeah, it's a volatile situation for sure.
Absolutely.
So while Germany is dealing with this contraction,
Right.
the UK isn't exactly celebrating either.
Not really.
CNBC also mentions their growth was measly 0.1% in November.
Yeah, just a sliver.
Hardly what you'd call a booming economy.
No, not at all. And it's raising some eyebrows.
Yeah,
It's definitely putting the Bank of England in a tough spot.
for sure.
They've got an interest rate decision coming up,
Mm-hmm.
and everyone's wondering which way they're going to go.
It's a real dilemma, isn't it?
It is.
Cut rates to try and stimulate some growth, but risk further fueling inflation?
Yeah.
Or maintain rates to combat inflation, but risk further stifling the economy?
Right. It's a tough one.
What are the experts saying?
Well, despite those inflationary pressures, like wage growth,
Right.
some economists are actually suggesting that a rate cut might be on the horizon.
Interesting.
CNBC is reporting on that.
Okay, so it'll be fascinating to see how the Bank of England balances these competing forces.
Absolutely. This is a decision that could have ripple effects
Yeah,
throughout the global economy.
for sure. Speaking of inflation, let's hop across the pond to the U.S.
Okay.
MarketWatch is reporting some good news here. Core CPI cooled to 0.2% in December.
Oh, that's good to hear.
That's got to give the Federal Reserve a little bit of breathing room, right?
Oh, absolutely. This is the first slowdown we've seen in 6 months.
Wow.
And it's driven by things like cheaper hotel stays,
Okay.
smaller increases in medical service costs, and relatively stable rent increases.
Okay.
So it's a positive sign.
Yeah.
And could signal that we're back on track to really tame inflation.
That's a sigh of relief for everyone, I'm sure.
Yeah, I think so.
But while inflation is cooling,
Right.
we can't forget about the impact this has on workers.
Yeah, that's really important.
CNBC is also highlighting that real hourly earnings
Mm-hmm.
only grew by 1% annually,
Okay.
and that's the smallest increase since July.
Yeah. So prices might be rising slower,
Right.
but wages aren't keeping pace.
It's a crucial point.
It is.
It's a very delicate balance.
Yeah.
We want to control inflation, but we also need to make sure workers aren't falling behind.
Exactly.
This 1% gain being the smallest since July.
Yeah.
It does raise concerns about the impact of cooling inflation
For sure.
on workers' purchasing power.
Yeah. Something to keep an eye on.
Definitely. Now let's talk about the housing market for a second.
Okay.
The Wall Street Journal is reporting that institutional investors are really pumping the brakes right now,
Interesting.
viewing current prices as unsustainable,
Okay.
which is a pretty different picture from what regular home buyers are seeing with all those bidding wars and sky-high prices.
It's an interesting disconnect, isn't it?
It is.
So you have everyday buyers scrambling to get a foot in the door, but these big institutional investors are holding back.
Yeah.
They're seeing a potential market correction on the horizon.
Interesting.
Their inactivity is striking too.
Okay.
Purchasing activity from these institutions is at its lowest share in 7 years,
Wow.
if you exclude that 2020 lockdown period.
Okay.
The Journal is reporting on that.
So while Main Street might be feeling optimistic,
Yeah,
Wall Street seems to be singing a different tune.
it seems that way.
It makes you wonder who has the clearer view of the market's future.
That's the question, isn't it?
It is. Speaking of different perspectives,
Yeah.
let's shift gears entirely
Okay.
and delve into the world of quantum computing.
Ooh, Exciting.
It's a field that's capturing a lot of attention and for good reason.
Yeah, for good reason.
But I have to admit, I'm a little fuzzy on the details.
Well, let me try to clear that up for you.
Okay.
Imagine a computer
Okay.
with processing power so immense that it dwarfs even the most powerful supercomputers we have today.
Okay.
That's the promise of quantum computing. And that power translates into potential applications that could revolutionize industries.
Okay.
From drug discovery to finance.
Yeah.
MarketWatch has a lot on this.
Right.
We're talking about things like developing life-saving medicines in a fraction of the time,
Wow.
or designing entirely new materials with unheard of properties.
That is mind-blowing.
It is pretty amazing.
It sounds so futuristic.
It does.
No wonder the tech giants are pouring money into this.
Oh, yeah. You're absolutely right.
Yeah.
Companies like IBM, Microsoft, Intel, and Amazon are all racing to try to harness this power.
Mm-hmm.
And it's not just them either.
Okay.
Startups like D-Wave Quantum, Rigetti Computing, and IonQ are also making waves.
It sounds like the Wild West out there,
It kind of is.
with everyone vying for a piece of that quantum pie.
Yeah, they are.
But what does this mean for the average person?
That's a good question.
Should we be paying attention to this, or is it just a bunch of tech jargon?
No, it's definitely not just jargon.
Okay.
The potential economic value creation from quantum computing is estimated to be somewhere between $450 billion and $850 billion by 2040.
That is a staggering amount of money.
It is.
So that signals the potential for some significant real-world impacts down the line.
It does. I mean, that's a huge number.
Yeah, it is.
Okay.
And it makes sense that with that kind of potential, we'd see not only investment,
Right.
but also some potential acquisitions on the horizon.
You're spot on.
Yeah.
These startups are attracting a lot of attention.
Yeah.
And it wouldn't be surprising to see some of them scooped up by the tech giants in the coming years.
For sure. It's definitely a space to watch.
Absolutely.
Okay, let's shift gears again.
Okay.
While we're looking at cutting-edge tech,
Mm-hmm.
the energy sector is also going through some pretty major transformations.
It is.
And not everyone is riding the wave so smoothly.
Right.
Bloomberg is reporting that BP is slashing thousands of jobs
Yeah.
in a cost-cutting drive.
A sign of the times.
It is. The energy landscape is changing rapidly.
Yeah.
And traditional giants like BP are feeling the pressure to adapt.
They are.
They're cutting 4,700 internal positions
Wow.
and 3,000 contractor jobs.
A lot of jobs.
It is. It really highlights the challenges these companies are facing as the world transitions to cleaner energy sources.
Absolutely.
But while some are cutting back, others are doubling down on innovation.
Yeah, that's right.
MarketWatch is reporting that General Motors is inking multi-billion-dollar deals
Wow.
to secure cheaper EV battery materials.
So it sounds like they're going all in on electric vehicles.
It does. What's their strategy there?
It's all about profitability.
Okay.
Cheaper battery materials mean they can produce these electric vehicles at a lower cost,
Right.
making them more competitive and appealing to consumers.
Makes sense.
They signed this agreement with a Norwegian company called Vianode,
Okay.
and it really underscores their commitment to making EVs a profitable part of their business.
It's a smart move.
Yeah.
They're essentially getting ahead of the curve by securing these materials now, before demand explodes even further.
That's right. They're betting big on the future of electric vehicles,
Okay.
and this deal is a key part of that strategy.
Okay, before we move on, let's take a quick detour into the world of cryptocurrency.
Sounds good.
I have to ask about Ripple's XRP.
Okay.
It's been on a tear lately,
It has.
hitting an all-time high according to MarketWatch.
I saw that.
What's driving this surge?
It's all about investor optimism.
Okay.
There's a legal battle going on between Ripple Labs, Inc. and the SEC,
Right.
and investors are anticipating a favorable outcome for Ripple.
Okay.
MarketWatch is reporting that the price of XRP, the third largest cryptocurrency by market capitalization,
Right.
reached an all-time high of $3.02.
Yeah,
That's a pretty impressive jump.
it is.
So are people just betting on a legal victory, or is there more to it than that?
Well, there's definitely a sense that the incoming Trump administration might be more favorable toward cryptocurrency than the previous administration was.
So that's adding another layer of optimism and speculation to the mix.
Interesting.
And it's really fueled hopes that XRP could climb even higher.
It sounds like a wild ride.
It is! Cryptocurrency is always so volatile.
Yeah,
It'll be interesting to see if XRP can maintain this momentum.
for sure. It's a space that's full of surprises.
Always.
Now let's switch gears and look at Blackstone,
Okay.
the investment giant. Bloomberg has an interesting article about their European private credit fund,
Okay.
for high net worth individuals.
Interesting.
Blackstone always seems to be making big moves.
They do.
What are they up to in Europe?
Well, their ECR fund has seen a threefold increase in assets,
Wow.
according to Bloomberg.
So this suggests that even with all the economic uncertainty we've been discussing,
Yeah,
wealthy individuals are still looking for alternative investments
they are.
to diversify their portfolios and seek higher returns.
Yeah, it makes sense. When traditional markets are volatile,
Right.
private credit can seem like a safer bet. Plus, high net worth individuals often have a higher risk tolerance.
That's a really good point.
Yeah.
And Blackstone's success in navigating the complex landscape of European banking networks and tax codes
Yeah.
really demonstrates their expertise
It does.
and commitment to expanding their reach in the region.
For sure.
They're clearly a force to be reckoned with in the global investment landscape.
Absolutely.
Okay, let's wrap up this first part of our deep dive
Okay.
with a topic that's been generating a lot of debate.
Mhm.
The state and local tax deduction cap, or the SALT cap, as it's commonly known.
Oh, yeah, the SALT cap.
It seems like this issue is back in the spotlight.
It definitely is.
MarketWatch is reporting that there's a renewed push to lift the cap,
Okay.
which has been a major point of contention
Yeah.
between Republicans and Democrats since it was introduced back in 2017.
Right.
So this debate raises some fundamental questions about tax fairness
It does.
and the role of the federal government.
For sure.
So what are the main arguments on each side of this debate?
Well, MarketWatch highlights that former GOP tax writing chair Kevin Brady is warning that lifting the cap would essentially give blue states a free pass to raise taxes.
Okay.
It would shift the burden to the federal government and potentially lead to tax hikes in other states.
Okay. That's a pretty strong argument against lifting the cap.
It is.
But what about the other side?
Well, the other side argues that the cap unfairly burdens taxpayers in high-tax states like New York and California.
Okay.
They see it as a matter of fairness, arguing that these taxpayers are already paying higher state and local taxes
Right.
and then are further limited in their ability to deduct those taxes on their federal returns.
So it sounds like a complex issue with no easy answers.
Yeah, it really does.
It'll be interesting to see how this debate unfolds
It will.
and what impact it ultimately has on taxpayers across different income levels and states.
Absolutely. It's a topic we'll definitely continue to follow closely.
Well, I think we've covered a lot of ground in this first part of our deep dive. We have from economic slowdowns and inflation to cutting-edge technology and investment trends. We've explored a wide range of topics that are really shaping the financial landscape right now.
They are.
So we'll be back in just a moment with even more insights and analysis.
Looking forward to it. It's amazing how much we've already talked about.
Yeah, and we're just getting started.
Right?
I feel like we've barely scratched the surface on some of these topics.
Yeah, there's always more to unpack.
Yeah, especially with something as dynamic as the financial world.
Oh, absolutely.
Mm.
Well, let's pick up where we left off with that inflation discussion.
Okay.
Remember that core CPI number we discussed?
Yeah, it offered some encouraging news.
It did. But if we look at the broader inflation picture in the U.S.,
Okay.
things are a bit more nuanced, according to MarketWatch.
So what's the bigger picture? What else is MarketWatch saying?
Overall, U.S. inflation actually rose by 0.4% in December,
Wow.
bringing the annual rate to 2.9%.
So at first glance, that might seem a bit concerning,
Yep.
especially after those encouraging core CPI figures.
Right. It seems like there's a bit of a disconnect there.
Yeah, what's driving that increase?
A lot of it boils down to that surge in energy prices,
Okay.
particularly gasoline.
Oh, okay.
MarketWatch reports that gas prices jumped by 4.4% just for the month.
So it's not necessarily that prices are increasing across the board,
Right.
but rather that a few key sectors are pushing that overall number higher.
Exactly. For instance, shelter costs, which make up a big chunk of the CPI calculation,
Right.
rose by a relatively modest 0.3%.
Okay.
And even more encouraging is that the annual increase in shelter costs was the smallest we've seen since January of 2022.
That is good news.
Yeah, it is.
Especially considering how much weight those housing costs carry when we calculate overall inflation.
Right. It suggests that inflationary pressures might be easing in some of those key areas.
Yeah.
But, as always, it's still too early to celebrate.
Right.
The Federal Reserve will be watching these trends closely in the coming months to see if this cooling trend holds.
It's like we're all holding our breath,
Yeah,
waiting to see if this is a true turning point or just a temporary reprieve.
exactly. Now, we can't talk about economic trends without mentioning those devastating wildfires in California.
Oh, of course.
MarketWatch has some coverage on the immense destruction there and the economic costs,
Yeah.
which are adding up pretty quickly.
It's a tragic situation.
It is.
And the economic repercussions are just far-reaching.
They are. Goldman Sachs is estimating that the total losses could reach $40 billion.
$40 billion. That's a staggering figure.
It is.
What kind of ripple effects are economists predicting from that?
Well, it's a multi-pronged impact.
Okay.
The wildfires are expected to slow economic growth
Okay.
and likely put some upward pressure on inflation, as
Yes.
MarketWatch is pointing out.
Okay.
Morgan Stanley even weighed in with some predictions of their own,
Okay.
suggesting that the wildfires could lead to job losses in California,
Yeah.
particularly in the service sector.
Mm-hmm.
And they also anticipate at least a temporary boost to core inflation
Right.
due to rising costs for cars.
So it's a really complex interplay of factors.
It is.
We're talking about job losses,
Yeah.
slower economic growth,
Mm-hmm.
and potentially even higher inflation,
Right.
all stemming from this one event.
Yeah, it really underscores how interconnected our economy is, for
Right.
sure, and how these external shocks can just throw everything off balance.
It's a stark reminder that even the most carefully crafted economic forecasts
Right.
can be disrupted by these unpredictable events.
They can. Okay, let's move to something a little more positive. We
Okay.
talked earlier about Blackstone's success in the private credit market,
Mm.
particularly in Europe.
Right, their European private credit fund for high net worth individuals is booming.
It is. It seems that even with all the economic uncertainty,
Yeah.
wealthy investors are still turning to those alternative investments like private credit,
Right.
seeking those higher returns in this
Mhm.
low yield environment.
It makes sense. When traditional markets are feeling a bit shaky, those alternative investments can seem a lot more appealing.
Exactly. And Blackstone seems to have cracked the code when it comes to navigating this space.
Yeah, they do.
They've got a deep understanding of the European market.
Okay.
They've built strong relationships with local banks
Mm-hmm.
and a really solid grasp of the region's regulatory landscape.
Okay.
Bloomberg really points all of that out as being key factors in their success.
It's a good reminder that it's not just about having the money to invest,
Right.
but it's also about understanding the nuances of the market you're entering
Hmm.
and having that strategic expertise.
You nailed it. And let's not forget their proven track record in private credit,
Right.
which gives investors confidence, and
Yeah.
their robust distribution network allows them to reach a wide range of potential investors.
Yeah, it's a powerful combination for sure.
It is. It really is. It's like they've created this winning formula,
They have.
which explains why they're leading the pack in this space.
Now let's shift gears again and talk about the world of technology.
Okay.
We've already touched on the excitement surrounding quantum computing,
Right.
but what about the more established players in the chip-making industry?
Yeah.
How are they adapting to this rapidly evolving technological landscape?
That's a great question. We've got an article here from Bloomberg focusing on Taiwan Semiconductor Manufacturing Company,
Okay.
or TSMC, as it's commonly known.
Mhm.
It's the world's largest contract chip maker,
Okay.
and its performance is often seen as kind of a bellwether for the overall tech industry.
Oh, definitely. TSMC's chips are in everything these days.
They are.
So how are they doing? Is this AI boom translating into profits for them?
It certainly seems so.
Okay.
The article indicates that TSMC is expected to post a significant jump in quarterly profit,
Okay.
driven by strong demand for chips used in artificial intelligence applications.
That makes perfect sense. AI is everywhere these days.
It is.
From self-driving cars to personalized medicine.
Right.
It's like we're on the cusp of a whole new technological era.
Yeah, and TSMC is a key player in this whole transformation.
Hmm.
They supply chips to some of the biggest names in tech,
Right.
including NVIDIA and Apple.
Yeah.
So their success really underscores the growing importance of AI across industries.
Now, there's also an interesting element here involving TSMC's stock, right?
Yes.
Something about an arbitrage opportunity.
Right.
Can you explain that for our listeners who might not be familiar with the term?
Absolutely. So TSMC shares are actually traded in two places,
Okay.
in Taiwan and in the U.S., as American Depository Receipts, or ADRs.
Okay.
And for some reason, those ADRs are trading at a significant premium to the Taiwan-listed shares.
Interesting.
Bloomberg is highlighting this.
So, in theory, you could buy the cheaper shares in Taiwan
Right.
and then sell the more expensive ADRs in the U.S.
Right.
and pocket the difference.
Yeah.
It sounds like a pretty straightforward way to make money.
It does, doesn't it?
Yeah.
But as with most things in finance, it's not quite that simple.
Okay, what's the catch?
Well, Bloomberg points out that this premium between the ADRs and the Taiwan shares
Mm-hmm.
has actually been widening instead of narrowing.
So the prices are moving further apart.
Yeah.
That's not what you'd expect if there was a clear arbitrage opportunity.
You would think they'd be converging.
Yeah, so what's going on there?
That's the million-dollar question. The article suggests that this persistent premium could be due to a few factors,
Okay.
including strong demand for TSMC's ADRs from U.S. investors
Okay.
who are particularly bullish on the company's prospects in the AI space.
So it's a reminder that investor sentiment can play a really significant role in market dynamics.
It can. It's not just about the numbers, it's about perceptions and expectations.
Yeah.
It's a really complex interplay of factors that can create these seemingly irrational price discrepancies.
Okay, let's switch gears one last time in this segment
Okay?
and talk about the upcoming inauguration of President-elect Donald Trump.
Yeah, big day coming up.
It is MarketWatch has an article that delves into how the markets are reacting to this political transition
Okay.
and what the key concerns are for investors.
It's a big one. The markets are always sensitive to these kinds of political shifts.
Right.
And this transition is no different.
Yeah.
It seems like we're in a bit of a wait-and-see mode right now.
Yeah, makes sense.
Investors are kind of anxiously awaiting details
Right.
of Trump's fiscal and tax policies.
It's that uncertainty, right?
It is.
Not knowing what's coming next can make investors a bit jittery.
It can. Remember those rising Treasury yields we talked about earlier?
Yeah.
MarketWatch points out that those were partly fueled by concerns about Trump's policies,
Okay.
especially those proposed tax cuts.
Right. There's that fear that tax cuts without corresponding spending cuts
Exactly.
could lead to a ballooning budget deficit and potentially reignite inflation,
Right.
pushing those yields even higher.
That's what's keeping investors on edge right now. They're trying to gauge the potential impact of those policies
Right.
on the economy and the bond market, which is always very sensitive to inflation expectations.
It's a lot to digest.
It is.
A lot of potential scenarios to play out.
A lot of unknowns.
Yeah, it makes sense that investors are proceeding cautiously.
For sure. And remember, Trump's policies could have varying effects on different sectors of the economy.
Oof.
MarketWatch points this out as well.
Mm-hmm.
So lower corporate taxes could boost profits
Right.
and potentially lead to higher stock prices.
Okay.
But his protectionist trade policies could hurt certain industries
Yeah.
and dampen overall economic growth.
It really is a mixed bag.
It is. It's going to be a bumpy ride for a while,
Sounds like it.
with both potential upsides and downsides to consider.
Yeah, it'll be fascinating to see how it all unfolds.
It will, and that's what keeps things interesting, right?
It does. I know we've covered a lot in this segment,
We have.
but there's one more story I'd like to bring to your attention before we move on.
Okay, let's hear it.
It involves that state and local tax or SALT deduction cap that we touched on earlier.
Oh yeah, the SALT deduction cap.
It's been a hot button issue for a while now, and it seems like it's back in the spotlight.
It is. There's a renewed push to lift the cap.
So what's the latest?
Well, according to MarketWatch, it's causing quite a stir.
Okay.
You see, this cap has been a major point of contention between Democrats and Republicans
Right.
ever since it was introduced back in 2017.
Yeah, it seems like it touches on some pretty fundamental questions about tax fairness
It does.
and who ends up bearing the burden.
Exactly. The MarketWatch article really dives into the arguments for and against lifting the cap.
Okay.
Proponents argue that it would offer much-needed relief to taxpayers in those high-tax states,
Okay.
many of whom are middle-class families feeling the squeeze
Right.
of the rising cost of living.
So for them, it's about ensuring that people aren't unfairly penalized
Exactly.
simply because they live in a state with higher taxes.
That's their argument.
Hmm.
They say it essentially amounts to double taxation for these taxpayers.
Right.
They're already paying higher state and local taxes.
Mm-hmm.
And then they're further limited in their ability to deduct those taxes on their federal returns.
But as we discussed earlier, there are also some strong arguments against lifting the cap.
Absolutely. Opponents, including former GOP tax writing chair Kevin Brady, argue that lifting the cap would disproportionately benefit wealthy taxpayers who are more likely to itemize their deductions and take advantage of the SALT deduction.
Okay.
They also worry that it would lead to a significant loss in federal revenue, which could further exacerbate the budget deficit.
It's that classic dilemma, isn't it?
It is.
Trying to find that balance between fairness for individual taxpayers
Right.
and fiscal responsibility at the federal level.
Yeah, it's a tough one.
It's a tough nut to crack for sure.
It is, and it's likely to remain a hot topic for quite some time
Yeah.
as lawmakers grapple with those competing priorities.
You know, it's interesting that this site deduction debate
Yeah.
kind of ties back into that tailored to economies theme we touched on earlier.
Right.
We see it in the luxury market thriving, while the rest of the economy struggles. And Blackstone, targeting those high net worth individuals with their European private credit fund.
Yeah.
And now in this debate about who benefits most from tax deductions.
Interesting point.
It seems like a recurring theme these days.
It does suggest that those traditional economic indicators we often rely on,
Yeah.
like GDP growth or inflation, might not be telling the full story anymore.
Right.
We really need to dig deeper and understand how these trends are playing out differently across various income levels and segments of society.
It's like knowing the average temperature in a room
Okay.
doesn't actually tell you if some people are freezing while others are sweating.
Right.
We need to look beyond those averages and really understand the lived experiences of people
Absolutely.
at different points on the economic spectrum.
That's a great analogy. It highlights the importance of considering those distributional effects of economic policies and recognizing that certain policies might actually exacerbate existing inequalities.
It's a sobering thought,
It is.
but an important one to keep in mind as we navigate these complex economic times.
For sure.
It's a reminder that we need to be having these conversations
Absolutely.
about how to create a more equitable and inclusive economy.
Yeah.
One where everyone has a chance to thrive, not just those at the top.
I couldn't agree more. It's a conversation that deserves our attention and our collective effort to find solutions.
Well, this has been an incredible deep dive into the day's financial headlines.
It has.
We've covered everything from global economic slowdowns and inflation trends to the exciting world of quantum computing and the intricacies of investment strategies.
Right.
It's been a whirlwind tour, but I feel like we've gained some valuable insights along the way.
Me too. I always enjoy exploring these topics with you and breaking down these complex issues in a way that's hopefully engaging and informative for our listeners.
And to our listeners, thank you for joining us on this journey through the world of finance.
Yes, thank you.
We hope you found it as insightful and thought-provoking as we have.
We'll be back tomorrow morning.
Yes.
With a fresh batch of headlines from major financial magazines.
Until then, keep an eye on the markets and stay informed.